It's another brand new week on Business Morning. Welcome to the program. I'm Chimeze Obi Iweala. Thank you for joining us. Well, teeing off with the global oil market update as prices dropped for a second straight session this morning as U.S. producers began restoring output after Hurricane Delta weakened while a strike that had affected production in Norway came to an end. Brent crude for December fell 55 cents to $42.30 a barrel, and U.S. West Texas Intermediate for November was at $40.08 a barrel, down 52 cents. Front-month prices for both contracts gained more than 9% last week, the biggest weekly rise for Brent since June, but fell on Friday after Norwegian oil firms struck a wage bargain with labor union officials, resolving a strike that threatened to cut the country's oil and gas output by close to 25%. In the United States, Hurricane Delta, which dealt the greatest blow to U.S. offshore Gulf of Mexico energy production in 15 years, was downgraded to a post-tropical cyclone by Sunday. And back here, the 2021 budget presented by the President Muhammadu Buhari is themed the budget of economic recovery and resilience, and it is designed to deliver on the government's economic sustainability plan goals, accelerate the pace of Nigeria's economic recovery, promote economic diversification, enhance competitiveness, and ensure social inclusion. The proposed revenue and expenditure for the budget 2021 are 8.43 trillion naira and 13.08 trillion naira each, resulting in about 5 trillion naira fiscal deficit. Let's look at the breakdown in comparison to the 2020 approved budget and the revised budget. Now, capital expenditure in the approved 2020 budget was 2.47 trillion naira. It was revised to 2.69 trillion naira in the 2021 budget. The government is proposing 3.85 trillion naira as capital expenditure, up by 43%. Non-debt recurrent expenditure was 4.49 trillion naira in the approved 2020 budget, 94 trillion naira in the revised budget, and 5.65 trillion naira in the 2021 proposed budget, up 14%. Our debt servicing was put at 2.43 trillion naira in the approved 2020 budget, was later reversed to 2.68 trillion naira in 2021 budget. Debt servicing is 3.12 trillion naira, 16% up. Our total revenue in the approved 2020 budget was 8.42 trillion naira, was later revised to 5.84 trillion naira. In 2021 proposed budget, it is pegged at 8.43 trillion naira. Its percentage change is 44%. Our total expenditure in the approved 2020 budget was 10.59 trillion naira, revised to 10.81 trillion naira. Total expenditure in the 2021 budget is 13.03 trillion naira. Other assumptions in the 2021 budget include oil benchmark of $40 per barrel, 1.86 million barrels of oil production, exchange rate of 379 naira to the dollar, and 3% GDP growth rate. All right, joining me now to make sense of these assumptions in the 2021 budget, the Chief Executive Officer of CFG Advisory, Mr. Tilewa Adebajo, joins me now. Good morning, Mr. Adebajo. Thank you very much for joining us on the program.
Good morning, Chimeze.
Now, this is the highest federal government budget size ever, 13.08 trillion naira. Do you think it's an ambitious budget?
Well, it's not about whether it's an ambitious budget or not. It's a question of what are the realities in terms of being able to implement this budget. You've given us some numbers on the screen just before we started this discussion. And I'd like to summarize some of these numbers for you. We're projecting revenues of 7 trillion. Out of the revenue of 7 trillion, we're projecting 3.1 trillion of that is going to go towards debt service. And we have an expenditure of 13 trillion. So clearly, you can see that if you take 7 trillion out of about 13 trillion, you have about close to 6 trillion naira of deficit that you need to finance. Don't forget that we carried over another 5 trillion of deficit from last year's budget that we still have not financed. So right now you're looking at about close to about 10 trillion or about $11 billion worth of financing that is outstanding for this government. So the issue is not about whether it's the biggest budget, but the fact is that can we sustain this budget? And really that is where the challenge is. And I think what is important that you have to understand is that the president also mentioned in his budget speech that we have exceeded the limits of the Fiscal Responsibility Act. So technically what the president is telling you is that this budget is illegal in the sense that the Fiscal Responsibility Act says that you mustn't go beyond your deficit financing should not be more than 3% of your GDP. And this budget has exceeded that. So they're going to have to find ways to amend that. But what I think the message we need to get across is the fact that, you know, part of this year, we were using 95% of our revenues to service debt. We have a revenue challenge. And it's not likely that this 7 trillion revenue, we're going to hit that target. So we have a situation whereby our deficit financing and our debt financing has become a challenge, because by the time you implement this budget, our debt profile will hit over $100 billion US. And that is really where the challenge. And the fact is that can we fund the debt and be able to sustain the debt financing? So these are the key challenges that we need to address in terms of looking at this budget.
Right. You talked about the provision for the debt servicing, which of course is expected to go up as much as 3.12 trillion naira in 2021. Now, the federal government planned to borrow about 4.28 trillion naira to fill the deficit. Now, what worries you most here? Because a lot of people feel that if we are to borrow, it looks like we're going to borrow just to pay, to pay salaries.
Yes, what you're saying is that if you take a look at the recurrent side of the budget, recurrent expenditure, by the time there's a lot of breakdown on what the component of recurrent expenditure is, but from that budget you're seeing, you have recurrent expenditure of about 10 trillion naira in there, and you have revenues of only 7 trillion naira. So you're going to be funding your recurrent expenditure with borrowing. And I think that is really what the concern for most people are. And that is beginning to show you red flags. So what we're saying is that our debt levels are becoming unsustainable. And it's something that we have to take a look at. So this is really what this budget is telling us, that we've hit the limits. And like I've said also, if you take a look at the tenets of the Fiscal Responsibility Act, the president also recognizes this, that we have a challenge. So not only are we not borrowing, we're not borrowing to fund capital expenditure, which everybody agrees is a sound thing to do. But when you begin to borrow to fund your recurrent expenditure, then it's a red flag. And we need to begin to take a look at some internal structural adjustments within the government and the system itself.
Now, just as you mentioned, the president in his budget presentation, of course, did emphasize that revenue generation remains a major challenge, but the government is determined to tackle the persistent problems with domestic resource mobilization. We've seen some revenue management measures introduced aside from taxation, which include removal of petroleum subsidy, ongoing verification exercise with integrated payroll, and personnel information, and of course implementation of service-based electricity tariffs. How will these measures help government revenue, and are there enough considering the economic challenges we are currently faced with?
Well, first of all, before the COVID pandemic, our economy was in a fragile situation. The COVID pandemic just took this economy beyond the tipping point. You have a situation whereby now we're in a recession and the economy is growing at negative 6.5% per annum. It's not a pretty sight. We have 50% unemployment and we have over 100 people in poverty. So the challenges are quite significant. So if you look at what we're trying to do with this budget, it's very important that we create more of stimulus to be able to get people back to work and to look at growth. The challenges the government are facing with revenues, taxes are going to be difficult. If your economy is growing at minus 6.5%, this is not the time to be taking a look at taxes because how many businesses are barely able to survive, if they're surviving at all? So it's important that you provide the support and the stimulus to get these businesses going. So you're going to have significant revenue challenges. All over the world, central banks are loaning money to government to provide stimulus packages to get the economies up and running. So the challenges are quite significant. So you have a situation whereby over the last 4 or 5 years, the policies have not been focused on growth, and the pandemic has just taken it off the tipping point. So revenue is going to be a challenge. The president admits in his budget that maybe we're looking at hitting revenues, maybe 60% of those goals. So are we making even 50% of our revenue? So there's no more room for subsidies, which is very important. And this is the time we need to look at the structural adjustments that we can put our economy on a growth path.
All right. So talking about recurrent expenditure now, we saw that estimates seem to have continued to soar. So what should we be doing now to reduce recurrent expenditures? Do you think this trend is sustainable?
It's not sustainable. We need to right-size government. And I think it's important that we take a look at this Okonjo report. We've been talking about it for quite a while, but we haven't really done much about it. The cost structures for most of the state-owned enterprises are high. There's a lot of inefficiencies within the system. So there's a need for right sizing within government itself to be able to control that wastage within the system and do away with a lot of the subsidies. This is not new information. It's something we've been talking about for the last 4 or 5 years. But I guess maybe because now that we have the challenge, maybe necessity can now be the mother of invention.
Now let's look at the capital expenditure is estimated at 3.85 trillion naira. That's 29% of the aggregate expenditure. President Buhari says that will take care of projects completion. How much impact will it make on our infrastructure stock?
Well, right now, I think the important is because, as you said, whatever revenue projection you have of 7 trillion, you probably only will be able to realize maybe 55 to 60% of that revenue at best, and you're looking to finance the rest of the deficit, both domestic and international. Now, the timing of these funds are going to be quite. These are the challenges that we need to look at in terms of when funding will be available and when we can implement some of these projects. So prioritization, I think, is very important right now. I think the key projects, the second Niger Bridge, a lot of the ongoing rehabilitation of roads in the country, and of course the Lagos, Ibadan, Kano Rail projects. I think it's important to prioritize what projects they can finish. Because right now this administration has only 3 more years to go, and they need to be able to deliver some legacy projects, very important for the legacy of this government going forward.
And the president, of course, stated that supervising ministers will monitor revenue-generating agencies. Do you think there has been enough push by the revenue generation agencies towards ramping up revenue? Are there measures you would suggest for these agencies like the FIRS or Customs?
You have to be realistic, Chimeze. Your economy is in a recession, growing at minus 5 or 6%. So it shows you there's no economic activity, or it's limited or restricted. So how do you want to tax people when the economy is not growing? It's impossible. Importation has slowed, what will impact revenues. Companies are not doing very well. A lot of companies are experiencing losses. The hospitality industry has been decimated. The airline industry is on its knees. So critical sectors of the economy are in trouble. So there's no magic about this. If your economy is at minus 6%, it's going to be very difficult for you to raise taxes from revenue, from FIRS and customs. In fact, these agencies need to give people a rebate and give them a tax break to be able to create stimulus, if anything else, at this point in time. So this is not the time you ramp up or you try to increase VAT or get all these things done. You need to give people a break. People are hurting out there, and people need break. They need relief. And unemployment is extremely high. So we need to face these issues significantly. We're at critical stages of this economic development.
So how much scope do we have for public-private partnerships, to deliver some of the budget outcomes?
That you have hit the nail on the head. From the numbers we have seen here now, as you very well presented, it is clear that the government does not have money to fund all these projects. So you have the Infrastructure Regulatory Concessioning Commission, you have the Bureau of Public Enterprises. Get all these agencies out. You have so many infrastructure assets out there that you can concession. Partner with the private sector, enhance your public sector, private sector, and get the private sector involved in funding some of these deficits for you. It's not everything that government can do. So government should put out a credible plan so that the private sector can get involved. Because from these numbers, you can see that government does not have the money. In financial terms, government is technically now insolvent. Or what you will say in general terms, government is broke. So we need the private sector to come in to carry some of this burden to help us develop Nigeria. And you've hit the nail on the head there. Private sector participation has become critical.
All right, let's look at other key assumptions there. Exchange rate of 379 naira to the dollar. Is this realistic considering the present liquidity pressure in the foreign exchange market that has weakened the naira in recent time?
Well, like I said, my own issue with the naira is not about the exchange rate you are giving. We need to move away from this static exchange rate mechanism we have with multiple windows. And I think as the World Bank and the IMF have said, let us have conversions within exchange rates and let's have a single window. Once we have that, then we can manage our foreign exchange rate better. It's very simple. If oil was trading at $100 a barrel, then maybe our naira should be at 50 naira or 60 naira to 1. If it's trading at 40 naira per barrel, then maybe it goes up to 200. But if you have a static exchange rate mechanism, multiple windows, you create too many distortions. And at the situation we're in right now, we don't need that. So once we get to a single window, we'll manage our foreign exchange in a more open and transparent manner. So for me, the foreign exchange is not an issue. It sorts itself out if you have the right mechanism.
And of course, the government hoped to grow the economy by 3% in 2021. Is that doable with what we have on ground?
It's doable, but if you grow the economy at 3%, you're at 6% deficit now. You'll still be at a minus 3% deficit. So clearly, it's not enough. So you're coming from minus 6, you grow it by 3%, you're at minus 3. It's a big step forward, 100%, but you need a more holistic and sustainable approach because our population is growing at 3.5%. So you need to be growing this economy minimum at least 5% per annum. And 6 at the moment, and we're minus 3. That means we still have a long way to go. But it's important that we chart a path to recovery. And I think that is really what is more important in terms of the policy. So the budget is here. We need to also look at our trade policy. We need to take a look at our investment policy. We need to take a look at our monetary policy and our fiscal policy. It's the synchronization of these 4 policies between the Minister of Industry, Trade and Investment, the Finance Minister, Central Bank, and strong leadership and direction from the presidency that get us out of this economic recession.
Thank you very much, Mr. Adebajo, for your time with us on the show. Enjoy the rest of the day.
Thank you very much.
Mr. Tilewa Adebajo is the Chief Executive Officer of CFG Advisory. We'll take a break, and when we come back, we'll talk about the race for the position of the DG of the WTO as Nigeria's former finance minister makes it to the final list. Do stay with us. Last week's announcement of Nigeria's former finance minister, Dr. Okonjo Iweala, and South Korea's trade minister, Yoon Yoon-hee, as the two candidates to make the final round of selection process for the position of the Director General of the World Trade Organization has elicited great applause, considering the fact that both candidates are women with great resume in trade, economic reforms, and advocacy. But more importantly, Nigeria, and indeed the African continent, is excited to have Dr. Okonjo Iweala make the final list. With a consensus candidate set to be announced by early November, it is hoped that Dr. Okonjo Iweala will emerge successful, and if that happens, what should we expect? I'm being joined by Dr. Okonjo Iweala's media advisor, Paul Nwabuiku, to tell us. Good morning, Mr. Nwabuiku. Thank you very much for joining us on the program.
Good morning. Yes, thanks for having me. It's a very good time because there's a lot of excitement around her candidacy, and of course, she's come a long way.
Sure, I can imagine that,
I
Mr.
want to put in
Nwabuiku.
perspective what has happened.
Okay.
Yes, basically, she started out as Nigeria's candidate, and she became the West African candidate. And then from there, she became the African candidate. And along the way, I mean, you've mentioned the fact that the latest information is that she and the lady from South Korea are the last two standing. And it's very significant that the European Union actually backed the candidacy of Dr. Okonjo Iweala, you know, even over the former British Secretary for International Trade, Dr. Liam Fox. So it just gives an idea of how much progress she has made. And I think it's something to be really, really happy about.
So what are the prospects of her emerging as the WTO DG?
Well, I think the prospects are at least 50-50 because you have two people left. But I suspect that it's even better than that. You know, like I just mentioned, she got the very important support of the European Union, you know, over the former British Secretary of State for International Trade, and that's really significant. You know, it just shows that, as the WTO said, both ladies, the lady from South Korea and Dr. Okonjo Iweala, they ended up as the final two because, in terms of the depth and the breadth of their support, they were the best among the list. You know, and it just shows that having gotten to this point, she has a very good chance of emerging as the DG of the World Trade Organization. But of course, it's not over until it's over, you know. But the race has been a very arduous one, very tough. But I think it confirms, if any evidence was needed, that Dr. Okonjo Iweala is a very strong international player and is highly respected, you know, by a lot of important forces around the world.
Absolutely. All right, so what would her emergence mean for Africa and Nigeria in particular?
Yes, her emergence, it's in so many ways, it's excellent news for Africa, and not just Africa, also for the global south. Sorry, the global south, which we belong to. You know, for a long time, countries, third world countries, developing countries, have consistently complained that the rules of the global trade system don't favor them. You know, having one of our own up there means, at the very least, that there will be greater attention on the issues that concern us. You know, and specifically, it's important to note that right now, global trade in Africa, external trade in Africa is quite low. It's just stagnating around 5%, 3%. You know, and there's every cause to believe that the WTO's multilateral trade system will help Africa to make some good progress around that, you know. And there's also optimism that WTO, under her leadership, will take a stronger look at certain fundamentals, and that Africa will be encouraged to produce more and also to process more of what it produces, you know. But I want to emphasize that she's not going to be a lone player. It's an international system. There are all kinds of forces and countries and regions that are vital to the process. But what it means at the very least, like I said, is that there will be a greater focus on the things that concern us. We're not going to be like accidental players, but we're actually there because anybody who knows Dr. Okonjo Iweala knows that she is very passionate about Africa. She's very passionate about the Global South. And her over 3 decades at the top levels of the international development have confirmed that. So basically, there's a greater focus on the things that are important to us as a region and as a country.
So tell me, what is the significance of WTO to the African private sector?
Well, WTO it's a very, like I mentioned, I mean, I'm sure you know a bit of the background. WTO was preceded by the GATT, which is the Global Agreement on Trade and Tariffs, which was set up in 1948. It was one of the 3 organizations that was set up following the end of the Second World War. And the whole point of the objective is to encourage international economic cooperation. And of course, in 1995, the GATT, which preceded it, became the WTO. So it's 25 years old right now. And the job of the WTO is to encourage international trade, is to reduce trade barriers, is to ensure that there are fair rules and that those rules are also enforced fairly. And of course, it operates through agreements. It gets countries around to negotiate agreements, and then those agreements are signed and later ratified by the parliaments. So it's in charge of the international multilateral trading system. So, and basically means that the entire world is part of this process. And talking about the private sector, I mean, the private sector, the rules that established by WTO affect not just countries, but also the private sector, and I want to also just make the point that she's also made, which is that, of course, the coronavirus has led to a lot of challenges for the entire global system and the entire economy and all that. And the current focus is on producing the vaccine. And Dr. Okonjo Iweala, who is the chair of Gavi, has made the point that it will be that the WTO and other players will have to focus more on ensuring that that the vaccines that come out, that are produced, that the Nigeria and the other developing countries and the African continent are not left out, because she keeps saying that if nobody is safe with COVID, except everybody is safe and all that. So even the WTO is going to play a role in ensuring that whatever trade mechanisms, whatever economic cooperation agreements are put in place, encourage, also don't leave Africa behind. It's important to keep that in mind as well.
Yeah, talking about the vaccine there, I know that Dr. Okonjo Iweala has talked so much about it, and then ensuring that whenever the vaccine is found, I mean, developing countries, underdeveloped nations should be able to have access to it. Now, if she becomes the Director General of WTO, what are the strategies or she is trying to put in place, or she hopes to put in place, to ensure that really these vaccines will surely get to countries that are underdeveloped?
Yes, the strategies are quite clear. I mean, the bottom line is that every country in the world is focused on getting the vaccines. And it's also a fact that the rich countries who are very powerful have the advantage because they have the resources and, of course, a lot of the capacity that exists for producing the vaccine also under their control. So it's important to have a system. It's important to negotiate, to have a system that encourages negotiation. And the first point to note, like she says, is that if everyone is unsafe, nobody is safe. Because if you have a situation where, for instance, the rich countries monopolize the access to the vaccine and all that, it will mean that the poor countries will not have access. And because in spite of the challenges posed by the coronavirus, the reality is that the world is interconnected, and ultimately the rich countries are going to also feel the pressure, because there's no way they can remain safe if other countries are not safe. So it's important to start with that argument, and it's something that she has made consistently in Gavi, within the African Union, the IMF, and all that. So the core strategy, if you like, is a conceptual one, it's a philosophical one, which says that, Mr. Rich country, you have to create a system. You have to encourage a system that also allows other countries to have access, because you can't be safe if other countries are not safe. So that's the very first thing. Then beyond that is to actually have the specific trade agreements, the specific economic cooperation agreements that would ensure that these things get into the hands of African countries as well. So these things are being worked on at different levels and all that. I know that, she's an ambassador for the AU. She also playing a very strong role in the IMF response to the coronavirus and all that. So at those levels, a lot of strategies and structures are being discussed to ensure that the whole world has access to it.
Now, know that globalization and multilateralism have suffered considerable pushback in recent years. How does she hope to change this narrative and reverse the situation?
Yes, you're right. I mean, even before the coronavirus hit, the reality was that globalization was under pressure because a protectionist government emerged in the United States, America first and all that. And a lot of other conservative countries in other parts of the world, including Britain, are also focusing more on their internal issues as opposed to multilateralism. So the challenge was there even before COVID hit. And COVID has exacerbated the challenge. And but I believe that, the point, in terms of convincing the world, it's a very fundamental thing. The world, everybody benefits more when there's openness. Everybody benefits more when you have lower tariffs. Everybody benefits more when there's a system for negotiation and dispute resolution. And it's not going to be something that she will do alone, but I believe that we as Africans, that we have a strong, we are invested in the continuation of globalization and multilateralism and all that. And so the case has to be made, is being made consistently by people like her, but also elsewhere as well. Because a situation where we don't have access to other countries through trade and all that is not good for anyone. So my point is that it's not something that she's going to do alone, but it's something that she has, for over 3 decades, she has consistently pushed, something that she believes in. And the WTO position, when by the special grace of God she gets it, is going to give her a stronger platform and, to really push for that to happen.
Right. You noted that, of course, that Africa's performance on the WTO is very poor. So what plans does she have to actually position Africa and indeed Nigeria to benefit more from global trade? Well,
her plans will be determined by the specific opportunities offered by the WTO position. And she is, I'm sure you spoke about her earlier, Dr. Okonjo is somebody who is a very conceptual thinker, and the whole point of international trade and cooperation is to ensure that the whole world understands that we all have a stake in this openness and all that. I mentioned the issue of the COVID-19, but there's also the specific issue of trade. Like I said earlier, external trade in Africa is quite low right now, and she has some very specific plans she has spoken about to ensure that Africa and other countries within the same economic bracket as Africa, the developing countries and all that, have that the rules encourage them to produce more. The rules encourage them to also process more, which of course is the fundamental challenge of economic development in countries like ours and all that. So She is. She has some very specific things that she's pushing, But it's also important to take note of the fact that before you can push Africa's interests, you must also persuade others that they also have a stake in encouraging those interests to become reality, And that is basically what's happening, The WTO is fundamentally about encouraging open trade. It's about the multilateral system. It's about negotiation. It's about agreements. It's about conflict resolution, And so all this will ensure that there are specific tools for ensuring that countries like Nigeria and that continents like Africa are not left out. And I'm sure she's going to maximize those tools.
Now, God willing, she succeeds as the Director General of World Trade Organization. So what kind of reforms should we expect in the short to medium term?
Well, I think the biggest challenge that the WTO is facing now is that WTO, to a large extent, is paralyzed because of the rivalry between the U.S. and China. And Dr. Okonjo Iweala's campaign pitch has been anchored on the fact that before you can even talk about trade, people must sit down, and that she's the candidate who has the networks, she's the candidate who has the capacity, she's the candidate who has the strong leadership abilities to get the big and small players to sit down and discuss, and that's actually the core of this thing, because and it's something that is really important, because you must first sit down before you can talk about trade, and that's the core of what she's about, really. And the fact that she has come this far shows that, to a large extent, the decision makers in the WTO and around the world are convinced that she has what it takes, what it takes to turn the organization around and ensure that these positives remain.
Sure. We're happy for her. We wish her all the best. Thank you very much, Mr. Nwabuku, for your time.
Thank you. And she's very grateful for the support of Nigerians. and like she said, we should all keep praying to the final whistle. Thank you very much for having me.
We wish her all the best. Yeah. Mr. Paul Nwabuku is the media advisor to Dr. Okonjo Iweala. All right, let's look at the activities at the equities market for the last week. Despite some profit taken towards the end of the week, record gains at the start of the week drove the equities market beyond the 28,000 point marks and to its largest weekly gain since May. Now, the all-share index closed heavily up 5.30%. All thanks to investors' interest in MTN, Airtel Africa, and Dangote Cement. When we look at the month-to-date and year-to-date, return for the index grew to 5.9%. All right, it's a new week. Let's see what the week possibly holds for the market. Let's talk to Kayode Oluyemi, stockbroker with CSL Securities. Good morning, Kayode. Thank you very much for joining us.
Thank you for having me.
Well, it has been a bumper harvest for both you traders and investors at the equities market. The later part of last week saw some profit taken, though. Now, do you see that continuing this week, or are we likely to see more risk takers coming?
I think that at the current level, the market is quite attractive. We have a lot of stocks that are offering very decent dividend yields. If you look at the market last week, the strongest index was the dividend index. So there's a switch towards the equities market from investors who are searching for higher yields. At the moment, things are a bit slow, but I expect that things will continue to pick up as the week progresses, as people sort of switch from fixed income to equities.
Now, some analysts will advise investors to trade in only fundamentally justified stocks as the weak macroeconomic environment remains a significant headwind for listed companies. For you as a trader in the market, what would you advise?
I would say that investors should stick with the high-quality names, fundamentally sound companies. because yes, the macro environment is still weak given the COVID-19 situation. However, there are a lot of names in the market that are strong, that are doing very well, and we still have very decent dividend payouts. So I'd still advise investors to look in that direction. The fundamentally sound stocks that have high dividend yields and dividend payouts.
All right, thank you very much, Coyote, for your time. I wish you a profitable trading day today. Okay, we do an opening call to London as well. Let's look at the debt and currency market when we come back. Just stay with us. Economists in Britain have warned the economy faces a surge in unemployment before Christmas as business struggle under lockdown restrictions and the government prepares new rules for areas where COVID-19 is the biggest threat. Let's see how the week is unfolding in London. Let's talk to my colleague there, Juliana. Good morning, Juliana. A beautiful week to you. Well, new lockdown rules for England are due to be announced later today. What soundbite are you getting from the City of London on this particular issue this morning, even with the economy's warning of a surge in unemployment before Christmas?
Good morning, Chimeze. It's a busy week here in London. Busy week, certainly, for Prime Minister Boris Johnson. He, at the moment, is having a COBRA meeting, trying to finalise details of this three-tier lockdown procedure in Britain, or the traffic light system, as it's going to be called. He'll be announcing further details in front of MPs in the House of Commons, and then there will be a televised address that our British viewers will be used to, and he'll be flanked by Rishi Sunak, the Chancellor of the Exchequer, and Chris Whitty, the Chief Medical Officer for England. And really what these new measures are trying to achieve is to simplify the lockdown rules here in England. There has been a lot of confusion over the past couple of weeks, so much so that even the Prime Minister during a news conference was unable to determine what was what and who should be doing what, because so many different regions are facing different lockdown restrictions. There seems to be a rapid surge of COVID-19 in the northeast and the northwest of England at the moment. There's a huge row brewing at the moment as well, saying that a lot of the restrictions are only affecting the north, not the south. And of course, historically, we have had divisions between the south and the north, which is what Boris Johnson tried to overcome in his overwhelming majority in the last election. The details are scant, and there have been warnings and threats by cabinet ministers about the media talking about some of these restrictions before the Prime Minister announces them. But, you know, it's such an important time here in Britain that so much is getting out quickly without the government holding onto it. What we do know is that we are expecting Liverpool and Manchester possibly to be in the highest tier, which is the red tier. If you are in that red tier, then pubs, restaurants, gyms, the hospitality sector will be shut down in your area. So this is literally going back to when the pandemic first started taking a grip of the nation back in March. That's what will happen. There has been outcry about this. I believe there are several pretty highbrow establishments in the north of England threatening to take the government to court. They do not think that there is enough scientific evidence for the hospitality industry to be taking the brunt of the crisis. As you just rightly said, we are expecting the furlough scheme to come to an end at the end of this month. A mass of redundancies. The Chancellor on Friday did outline some of these local furlough schemes which we'll be expecting, but some say just doesn't go far enough. Then there's the amber tier, the second tier, which means that the 10 p.m. curfew will still exist, but people will not be able to mix with other households. And then there's the normal tier, the green tier, which is the tier we're currently in at the moment, the rule of six. It's very confusing. I'm sure you're confused. I'm quite confused. The government say this is going to simplify measures, but as you said, you know, we're on the brink of a really deep, darkening recession. We're actually in a recession, and August GDP numbers didn't really quite match up to what we were hoping. So there are lots of concerns about this. But later in the day, when the Prime Minister talks, we'll have more clarity.
Absolutely. Well, another news out this morning is that British Airways Chairman and CEO Alex Cruz is stepping down as the airline's chief executive. What next for him and what next for the airline?
Interesting story, actually. It seems to be dominating business headlines here in Britain. Yes, Alex Cruz, he is what they call an airline lifer. He's been at several airlines. He has been at the top of the helm in BA since 2016. So he's pretty much stirred them through their most controversial periods, including scrapping the free meal that you get for short haul if you go on a BA flight. Also, as well, trying to grapple with the pilots during that stint last year when there were several strikes, and of course the pandemic. Willie Walsh was the long-serving chief exec of IAG, which is the parent company that owns BA. He stepped down into retirement last month, and he was taken over by boss Louis Jelejo. And this appears to be the first big managerial restructuring that the new boss has done. And Alex Cruz is out. He's not really out. He is going to have a non-executive chairman title, but it does appear to be a massive change. He is going to be swapped in with immediate effect by a guy called Sean Doyle. He was previously at BA for 20 years, and then he moved over to the Irish airline carrier Aer Lingus, that's also part of the IAG group. So he's now stepped in as the new chief exec. Lots of wibbling and changing. Of course, BA, again, like the hospitality sector, the airline sector has been brutally ravaged. They have already let 8,000 staff go. They're still in talks with unions about potentially letting up to 12,000 go. So it's a really choppy time. But yes, Alex Cruz's departure has definitely, plucked some feathers, shall I say.
Now, just a quick one, Juliana, lead us into the week. What should we be expecting aside from the new lockdown rules? What should we look out for in the corporate world? And of course, on data front.
Well, it's a busy week here in London for corporate news. We're expecting online fashion group ASOS to deliver sales. I think they did pretty good in the second quarter, so it'd be interesting to see how they've fared so far. House builder Barratt will also be giving us a trade update, as well as the pubs group Wetherspoon. Now, that's going to be really crucial because Wetherspoon kind of have a monopoly on cheap pubs up and down this country, so it'll be interesting to see how they've performed with these new curfews. And then, of course, Thursday, October the 15th, a crucial date for Brexit. Crucial date and Brexit, those are two things that go hand in hand. And we've been saying that for the past 3 to 4 years. But October the 15th on Thursday was that self-imposed deadline that the Prime Minister put in himself. We're not expecting a deal to be done by Thursday, but we are going to expect much, different news briefings and press briefings, and perhaps a visit to Brussels as the deadline does dwindle on. If we don't get a deal this week, perhaps the first weekend of November, which is what observers are pitting at.
Quite a lot to chew. Interesting. Well, we expect more update from you later in the day, Juliana. Thank you. And back here at the debt and currency market, let's talk to FX dealer at Access Bank, Bosu Obembe. Good morning, Bosu. Thank you very much for joining us.
Good morning, Chimede. Thank you for having me.
Well, I know you play more in the FX market, but Treasury bills market have been somewhat quiet. Going into the new week, do you expect market participants to shift their focus to the primary market, where the CBN will be rolling over 104 billion naira worth of maturity?
Yes, I expect attention to be focused on this week PMA, where DMO will be issuing about 104 billion in the standard maturity. So I expect the rate to actually come down the long end of the curve, because what is maturing is on the 354 DB is 124 billion. So, but DMO is only issuing out about 104 billion. So there is a 20 billion shortfall from that. So I expect a lot of demand from that angle. And if you look at the liquidity level, currently the market is at 175 billion up. So the buying interest is still there, given that we don't have a lot of the attractive investment outlay currently for the players. So I still expect the buying interest to continue, given the liquidity in the system. However, I expect a kind of a cherry pick. So people will try to play on the short term because of you don't know what's going to happen next year, and because we are still expecting the DMO to give us the bond calendar that will come out this week. So my interest will still continue, but I don't expect. I expect attention to be focused on Wednesday PMA.
All right, thank you very much, Bosu. I wish you a profitable trading day. Bosu Obembe is a FX dealer at Access Bank. And with that, we wrap up today's edition of the program. Thank you very much for watching. I'm Chimeze Obi Iweala.